Obie, thank you very much for joining me again for just kind of this interview update. I appreciate you giving us some of your precious time. Thank you.
Yeah, absolutely, Aaron. Great to be on again. And yeah, anytime.
Yeah, so I want to first give a warning for anyone who's listening or watching that I am sometimes wrong and that everyone should do their due diligence. No one should pay attention to just what I'm saying. Um, Grown Rogue, as excited and passionate as I am of Grown Rogue, the company, it is a microcap. It can be very illiquid. It can be very volatile. It may not be suitable for you. So please, caveat emptor, please be careful. Do your own due diligence. Understand that if you were to invest in the company, that this is still a very illiquid company. Before we go in, Obie, I just want to give a quick summary of why people are listening, to why they would be interested in this interview or why they should listen to you, Obie. And my summary is that you're doing something that other people and other companies have not been able to do, and that is to show operational excellence, cultivation, craft cultivation excellence, specifically in some of the hardest markets in the country. You're the number one flower producer in Oregon. When companies have left, people have gone out of business. You're not only the number one flower, you've proven that you can be free cash flow positive in Oregon and thrive. Two, you then went with, instead of spending crazy amounts of money for $4 million, you entered Michigan. And despite prices collapsing there, you have become the top 5 indoor producer in Michigan, producing lots of free cash flow. You, with those two markets, some of the most competitive markets in the country, you have some of the best margins in the industry in terms of gross margins and operating margins. One of my favorite things that I talk about is that your office is one of the worst CEO's office I've ever seen. You are in the grow house. There are no doors to your, I guess, your left. It's just an open air room. In fact, this shirt that I'm wearing, just so I've not been paid by Grown Rogue, but they sent me this really nice shirt. I had to wash it 3 or 4 times because it smells so much of weed. It's like you soaked it in weed, but I love it.
It's like
feels really good.
It's the scratch and sniff. And
So,
Aaron, as
so
I
Ed,
said, I have been updating my office. I got a whiteboard now and everything, so I'm starting to become like a real guy. So
yeah, wow, it's really great. The last thing I would say is you're basically have come up with a model, small scale cultivation, these 50,000 square foot kind of facilities with procedures, with know-how, with people, dedicated people, where you can take that and go east to some of the least competitive markets and bring Oregon quality cannabis there, but at Oregon cost. And so you announced, we're going to talk about this, you announced you're going to New Jersey, which has 3 times, the pricing is 3 times what you're receiving in Oregon. You're helping Goodness Growth with their cultivation, and you're working on other markets. So there's kind of this rare thing in cannabis where you have this kind of reproducible reinvestment runway where you can go into different markets with the hard fought learnings that you have. So anyway, that's my summary. So thank you for listening to the pitch, Obie.
yeah, thanks.
And so let's get to the news that you're announcing, which is that you're opening retail in New Jersey. Why invest in open in retail when all you've done to date is cultivation?
Yeah, so one, thanks, and then thanks for having me on again. We really looked at Jersey is a really exciting market for us in terms of the ability for us to, focus on our cultivation, move our products into a new state where customers can appreciate what we bring, again, back to high quality, low cost. And as we evaluated the market there and looked at the different opportunities, this, retail became fairly compelling. from a financial standpoint, right, we think it's good investment. But it's also balanced where it's not going to become like a core component of our business. We're making a passive investment. I mean, you'll see the release and, the announcement kind of explains some of the details. But it's the whole point is to provide, some financial diversification for Grown Rogue, right? A chance for us to have a little bit more exposure in some different avenues. Two, we really like the idea of having captive retail, especially in some of these markets that are more dominated by a smaller set of bigger companies. And three, we think, our cultivation there in partnership with Abco is really going to drive some better opportunity for our retail partners. Again, this is not like where we're operating it. We do want to bring some of our learnings and kind of the Grown Rogue way in terms of cost control and operational excellence. And the partner we found there, he's amazing so far. I'll have to introduce you to Leland at some point. Like he's phenomenal, great entrepreneur, scrappy. I think it's going to be a great thing for us. And this will be the first one. We're calling it Grown Rogue Retail Ventures, GREW for short. And we plan on, potentially going into 6 or 7 of these in Jersey. Not because retail is like becoming a core focus of Grown Rogue. We would only look at these in states where we have, cultivation, where we can kind of activate them. And so just being very selective in terms of how we approach it. But yeah, we're excited about it. And it's in a really, really good location. It's in West New York, which, not being familiar with the East Coast, I was like, wait a second, I thought we were in New Jersey, but it's actually West New York, New Jersey. I've been there. I was on site a month or two ago. And I mean, it's in a great spot, tons of traffic. It's one of the most densely populated areas in the US on a, people per square foot. Right across the border from New York, you just go across the Hudson through the, the tunnel there. And it's going to be really exciting, restricted in terms of not a lot of, other retail that are going to be close. I think there's no other retail within like 3 or 4 miles. And so we think it's going to be a really, really high, revenue store. And yeah, we're excited about it. So kind of a new opportunity for GR and a kind of a focus for us, but still not distracting us from our core business, which is high quality, low cost flower cultivation.
And so how much of your team's bandwidth do you think this will take up? And then it's very exciting. Like, I understand the desire for retail, especially you can increase your margins. It sounds like a great investment. I worry about the lack of focus because I've seen so many MSOs struggle with focus, and they're running like, 50 million businesses in a bunch of different states. And one of the core theses that I have about Grown Rogue is your kind of blinders and focus allows you to run circles around much larger competitors because you have your head down focused. So yep. How much you mentioned it's a passive investment. So can you just explain or just talk about how that's going to work or how much time it's going to take?
From the operational team that we have, it's essentially zero. So no bandwidth will go into their participation in this. It's not the same as cultivation. In terms of like our leadership team, a very small amount. I mean, I probably spent, 30 hours on this over the last 2 months. And, I work a ton. So it's, less than 2% of my time probably is focused on this. I've got a guy now helping me with some other deal flow we'll talk about in a bit in terms of, other expansion objectives we have, who's handling most of the legal and kind of the documentation. And so there's a little bit of resources we're putting into a new hire. But again, if this was going to be a distraction and we thought it was going to, divert our focus, we never would have taken it on. We're also partnering. Bengal Capital will be a partner in this deal with us. They bring a tremendous amount of retail knowledge from their time at like Forefront. And so really relying upon them in this, financing arrangement, along with the entrepreneur Leland, who's going to be running the day-to-day, to ensure that just the right controls are in place. And again, our goal is to provide some guidance and input, and really just the learnings we've had and help maintain that focus. But it'll be a very, very small amount of our bandwidth. And again, if I thought it was going to be a distraction, we never would have done it.
Gotcha. So you kind of get guaranteed distribution. You get a great store in a
Yep.
great location with incredible density, should produce a lot of income. You increase your margins, but it doesn't distract you from your core mission. Sounds like a win then. Yeah.
Yep. Yeah. I mean, and we know that.
And this is one of potentially six or seven down the road.
Yeah, the way the regulatory works there, I think you can take a passive investment. It's like below 35% in six or seven of these. And so that's our goal. Again, we want to be thoughtful. We've got a strong balance sheet right now, which allows us to use a little bit more of our own capital. And we also got, a big group of folks that, want to kind of participate in the things that Grown Rogue finds interesting, especially in markets where we're going to have exposure. And so we'll probably raise a little bit of money from, very close people to the business who see this as a good opportunity and overall benefit Grown Rogue long term. But it's like, and you couple this with 280E potentially going away and some of the news in HHS, like maybe our timing's really good. That'll increase more profits. You look at some of the performing stores in these states that are doing $50-60 million a year, and we think this location is fantastic. We're not estimating that type of revenue, but we think it has potential to be one of the better performing stores based upon its location. It provides us a little bit of captive retail, when you think about Grown Rogues, away from just the financial investment, but, ensuring we have a place to put some of our product, while simultaneously knowing that our product's going to be in high demand there. I've been in those stores, like the quality of product in Jersey is, it's a maturing market, but it's still not very good. And so to be able to drive more traffic to the store, which helps us sell, our flower, but also has a back end benefit to create more of a revenue stream for us. It just seemed like a no brainer. And simultaneously, like this is a small bet for us. Even if it all goes wrong, we're not betting the farm. This is not like, oh my God, if it goes sideways, it's going to be terrible. And so this is, as we continue to grow the business and we expand and scale, like we have to be thoughtful and like, Warren Buffett, I hate to use like these really successful people and compare them to us, but like, I think one of Munger's quotes was, when it's raining gold, put out a bucket, not a thimble. And so we look at Jersey and some of these opportunities like, hey, when it's really good, we're going to be aggressive and we're going to move quickly. But we're also going to be very patient. I mean, we're getting a lot more deal flow now. There's tons of opportunities. Like we had a bunch of people asking about retail in Michigan, and we were just always like, nah, no. But this one really caught our attention. Location, and most important, the team. Like, again, I'll introduce you to Leland. He's fantastic. And I think he's going to be a really, really good operator.
That's awesome. When do you think the store will open in West New York?
We're probably 120 days. So what is it? Middle of January. So February, March, April, May, June.
End of Q2. End of Q2.
Yeah. Yep.
Okay.
Yeah, exactly.
And your new, now the big focus is your cultivation facility in New Jersey. Is it on schedule, on budget? What can you give me an update on how that's going?
So far, so good. We'll be on site this week, kind of doing, turn on technical planning with our core kind of internal team. To date, it seems on schedule, on budget. No big surprises. Like, almost all the walls are up already. Equipment's been sited and sourced, and we're waiting to pull the trigger on ordering that. HVAC's been ordered. So far so good. We haven't seen anything that's caused us angst or concern. Granted, there's a bunch of things that could come up, like licensing timelines or inspection delays. But so far, it's been going right along schedule, and I couldn't be happier with the progress.
And when do you hope make your first? And then when is it? Just 90 days after you doing your first sales? Like, what's the rough timeline?
Yeah, we've been targeting Q2 for completion. Of like we're ready to turn the facility on and occupy it, and we think shortly after that, because we'll through our planning figure out the best way to bring product to market quickly. We'll want to scale it in there. We're building this thing in phases, but I still think Q3 is the right timeline for when we'll start seeing our first sales in Jersey. Will it be a little faster than that? Maybe. Should it be slower than that? Not unless we have some, kind of big unforeseen delay. But again, our goal, considering how long it takes most people to build, we'll be up and running this year for sure. And then our goal is to be up and running as quickly as possible. And Q3 seems very realistic to have product in the market and slowly start putting it on the shelves and, giving consumers, a better quality product that, at a same or better price.
Gotcha. And I hear from a number of sources that there's a shortage of legal cannabis flower and legal and cannabis products in New Jersey. Can you share what you're hearing from the market in terms of that? Is that accurate from what I hear?
Same. I mean, pricing is really strong still. We modeled it, we first started looking at this back around, May of last year, then got the deal done. And prices then have held pretty steady. I think our models are out $1,600-$1,700, but the street value or the retail wholesale value is still pushing $3,000 a pound. And there's it's hard in these markets because our quality differentiator is so much different than I think a lot of the operators have there. Most of it's MSOs who, they produce pretty good flower, but I don't think it matches up with just the genetic diversity and the care that we take. It's one of the reasons we've been so successful in the competitive markets. And so I think the need for flower like ours is going to be really high. And we don't expect having any problems getting sell through and, ensuring that, our working capital is managed appropriately.
And I got to imagine that when the legal consumer in New Jersey gets an opportunity at Oregon quality flower, especially craft cultivation, because you're only looking to produce 12,000 pounds a year. So it's not like you're blasting out a ton of, but the demand's going to be pretty high. So going to that, if I assume the following, now I know you're going to ramp up this facility and that you're not just going to go out guns blazing, but if I assume I want you to work out this math that I'm not a crazy person. And anyone who's listening know that I'm biased. I am very biased about Grown Rook, so take this with a grain of salt. But if I assume 12,000 pounds a year, with your partner, you're going to get 70% of that. And if I increase, right now, your cost of production in Oregon and Michigan is sub 600, but I assume 700 all in. Or so, and then I just assume an $1,800 kind of margin that gets me to 2,500 a pound, not even 3,000.
Yep.
I'm coming out with $15 million of EBITDA of a run rate from New Jersey. One, is that okay? Is that math right? I know it's not rocket science, but the reason why a 15 million may not center on is, to anyone who's listening, if you work out the fully diluted enterprise value of Cone Rogue, it's 60 or 6 right now as we're recording this, 60 or 65 million. You probably did 7 or 8 million or so between Oregon and Michigan last year. Those markets are going to grow. 15 is a really big number. I just want to, that's literally 200%. Increase of your cash flow from Oregon and Michigan. I just want to, okay, so I'm in the right ballpark. Okay, and so let's move on from that because that is what it is. Are you working on other states? Because clearly if you could produce for $600 or $700, there's a lot of states you can enter.
Yep. Yeah, we're in advanced discussions for what will be our sixth market, which we expect to either have a, finished documentation in the next 60 days or realize that it's not the right project for us. We got a little aggressive during this market downturn. Part of that's a big kudos to you and your help in terms of ensuring we had the right, capital partners to help us fund some of these things. It's a huge kudos to our team who are delivering free cash flow, that allows us to feel comfortable that we can take on these projects. And you combine that with the current conditions of the markets where there's assets and opportunities that normally would not be available. And so we knew coming out of this, because markets change, they're fickle, they go up, they go down. We want to be a little greedy when others are fearful, and there's a lot of fear in the markets right now. And so we're very comfortable with our, you talked about it earlier, our box, which is 50,000 square feet, 10 to 12,000 pounds a year. It just sits really nicely in what we feel is the right balance of quality and velocity, ensuring that we get sell through of all of our product. And so, our goal in 24, and I mean, literally it's on my board, my whiteboard in my fancy office around, priorities, which is executing Jersey is super critical. And we're going to, we're fully aligned. The teams, just every decision we make is towards advancing that. But one of the things also was really critical is have the next project on the back end of this. And that's what we're targeting. And it'll be another exciting market. The one we're kind of focused on is, another, Midwest, Eastern market, less competition, better pricing. And, again, our goal in the next 2 to 5 years is to be in 10 to 12 markets. We're in 5, including the partnership with Goodness Growth. And, this would take us to 6. And then, it's 4 to 6 more over the next 2 to 5 years. And we'll be at kind of the, where we want to be, at least the target we set out today. It's constantly changing your goalposts in terms of, where you want to take the company.
Now, you mentioned Goodness Growth. Can you give me an update on how things are going, just at a very high level, with Goodness Growth, Maryland and Minnesota? Maryland just came out with news. It sounds like December for the entire state. The state announced like really great numbers. And then I know Minnesota is going adult use in 2025 as well. But I was just curious if you could just talk at a very high level, because I know Goodness Growth has been working on kind of turning around, improving their quality. Just as a disclosure, I'm an investor as well in Goodness Growth, but I'm just curious if you could give us an update from your perspective on how things are going.
I think swimmingly well. Hasn't been perfect. There's challenges with some of the, conditions and environments there that, we're having to navigate and figure out. But at the core, they have a fantastic team, all the way from, their leadership, Josh Rosen, who's their new interim CEO and is doing a lot of great things to kind of, drive some, better solutions for them as they navigate, the next phase of the cannabis industry. All the way down to, the growth techs who are executing upon some of the processes and systems we've brought. We've seen really, really good results. I mean, I think you can look at some of Goodness's reporting and kind of get a flavor for increased quality, increased yield, better sell through. I mean, their numbers are going up. Adult use really, really helped in Maryland. That was a huge catalyst for them. And so, yeah, I'd give ourselves like a B plus in terms of where I think we're at. Some of that's, in our control, some of that's outside of our control based upon just some of the infrastructure. Like, they've got greenhouses in very difficult environments. And so there's a lot more inconsistency. But really, really happy and just really feel honored to have been picked, as their preferred partner to help them with some of the stuff they're doing. And super excited about Minnesota. I mean, that's going to be a beast of a market. They've got a great position, super entrenched. It's their home state. That as a single market could be the most important single catalyst for an individual company in the industry right now, based upon where they're currently at and what adult use for Minnesota could do for them. Could be huge. And so, we're planning very aggressively to be prepared for that. Still a lot of unknowns, but just going to continue to support them in, the best way that we can, and, hopefully make, everything better for them as well as us.
And so just for some background, there are only 2 operators right now in the medical market for the entire state of Minnesota. And based on the law that was passed, there's only 2 that are allowed to be vertically integrated. It's Green Thumb and Goodness Growth. And Grown Rogue, you now have a strategic partnership where you share in the upside. So it's great for both companies, bringing cultivation, sharing best practices, et cetera. So that should be really exciting. How are things going in Oregon? Your kind of original core market. I know you just got through Croptober. I would love to hear on just how things are going. What do you see for Oregon and how things are going?
Yeah, I mean, 2023 was a fantastic year for us here. We had a really, really good outdoor harvest. We had taken possession of a new farm late in 22. So we had our first grow kind of crop harvester from that, and was far exceeded our expectations. So we were up maybe 20-30% on overall yield from what we were kind of anticipating. So far, pricing seems strong. The holidays in Oregon always throw a wrench kind of in, it's almost like everyone takes a break, which is interesting because it's very different than Michigan. Michigan maintains a pretty strong kind of, market purchasing and sell through into December, whereas Oregon is notoriously slow, which is usually reflected in kind of the seasonality of our business. But January is off to a hot start, lots of demand, continue to have very little of no inventory. We've launched some new products, some new pre-rolls that are getting tons of traction in the Oregon market. But overall strong. And, the goal here is to continue to incrementally improve through operational efficiencies, maybe a little bit more production, some new products. But, Oregon's a mature market. So to grow Oregon at, 10 or 15% a year is a huge win, versus you're not going to see 100% growth year over year in a state like Oregon.
Yeah.
And so continue.
But you continue to see that kind of organic growth and that things are stable, because it was for a while, like prices are coming down, just like in California, but things seem more stable. Demand is pretty consistent, and you're kind of growing at a good pace.
Yep. Price, as I tell my team, is impossible to predict. It's something we don't control. It's based upon market demands, but the things we control, we're continuing to control really well. Our expansion in 23 definitely impacted the teams. And so we've seen things we need to tighten up as we get into 24, which we're doing. But overall, super excited with Oregon. It's our core market. It's headquarters where we're from. And we want to, once you get the number one share, you want to keep it. And so we're very, very motivated to keep that belt, so to speak.
And so talk to me about Michigan. That market is just crazy. Again, they just reported like monster sales, something like $3 billion in legal weed sales last year.
It's not surprising, I think, to anyone that wasn't really aware of what it was like. This was the largest medical market, second to California on a total volume, but number one on a per capita. And so I think Michigan, one, we've got a really strong brand presence there. I think we've grown branded sales in that market up to like 40-45% towards the back end of the year. And that's through, some exclusive proprietary genetics, the reputation we built, the focus of our team to push more into branded product, less of, the kind of bulk deli style that existed in that market pretty heavily. But it's a monster. And our team continues to execute. Yields are good, costs are good, sell-through is good. But I think Michigan regulatorily, at least from what I've seen on the outside, only being in, 4 or 5 markets, has done a really good job of balancing limited license versus kind of, competitive landscape. And so I just like the way they rolled out the regulatory process. And I think they've created a good balance where, if you're well put together and have a good team, you can really be successful. And excited about the future there. And, again, similar, we're going to keep kind of growing incrementally. We made some process changes this year that we think will increase yields by 10% with a very low capex. And so we're excited to see kind of that come into our portfolio and, kind of in the inventory that we can sell through. And there's still 20-ish thousand square feet of, space that we can construct into there as we continue to see, more demand than we do product. But just again, being thoughtful about where we deploy cash. Right now, almost all of our free money and the money we raise is going to Jersey. As we start talking about, into the future, where does our free cash go? Michigan's got, more potential to build out some additional infrastructure.
Gotcha. So if I just think about like Oregon versus Michigan, it sounds like Michigan's it's not yet mature. It's at like a higher growth rate than like an Oregon would be, but nothing like New Jersey. So it's like New Jersey's really high, then you got like Michigan, and then below that you've got Oregon kind of maybe growing at 10 or 15%. Is that a way to think about it?
It's a balance. I think the main difference between Oregon and Michigan is Michigan in general is a bigger market, which means we should be able to have a higher volume of sales in that market. And so like right now, pricing in Michigan is a little bit better. So our revenue there as it relates to Oregon is kind of flat because we have outdoor in Oregon, but it's maybe a little slightly better than what we have in Oregon. But the total sales in the state are much higher. And so, we think we can gain more market share there, not more market share, but put more pounds into the market than what we could in Oregon based on the percentage of the overall market. And that's why I think there's higher growth still there.
That makes a ton of sense. You started doing pre-rolls and you've been seeing some success. Can you share more about what you're doing in pre-rolls and what you're seeing and what to expect?
Yeah, we've had pre-rolls in Michigan for some time, kind of just single 1 grammers. We had pre-rolls in Oregon years ago, but we got out of that just because the supply chain was so difficult for us to manage. Relaunched 2 new products this year. The first one is a Grown Rogue pre-roll. It's all made from our outdoor product. Cool branding. It's just the typical kind of, core Grown Rogue brand. Fantastic results. I mean, people are begging for these things. Coming into the market, I think we launched those in kind of middle end of the summer. And then, as we looked at the pre-roll market, and it's a growing category, and looking at other ways for us to take, increase margin and have more brand kind of awareness and, branded product on the shelves, especially in Oregon, which is a deli style flower market. We launched a new brand called Yeti, it just came out a couple months ago. And this might be the most transferable product that Grown Rogue has. One of the things we've realized is we actually have quite a moat around our flower business, because producing our quality at our cost, it's not a recipe. You don't just hand that to someone and say, make this. But the Yeti product is it's kind of a mix of a really small flower and a little bit of trim, and it's really cost competitive, and the quality that's actually exceeded what our expectations were. And so our margin on some of the products has gone up considerably, and the response has been fantastic. I mean, it's called YetiSmokes.com. People can go look it up. Cool character, great branding. We got merch and stuff, and I'm excited about that product.
Are you bringing it to Michigan? Is this something you're offering?
Yeti's in Michigan. Our GR pre-roll packs are in Michigan now, but Yeti launched in both states, in Q4, Q1, our fiscal Q4, Q1.
Gotcha. So just recently. And is this something I'm assuming you're bringing to New Jersey as well?
Yeah, of course. We'll look at packaging and some of the regulatory requirements there. It varies state by state, but this is definitely a brand that we will be bringing to all the markets. Potentially looking at some, opportunities in even Maryland with Goodness. But the Yeti brand in particular, I think is very transferable, just based upon the product that goes into the pre-roll.
That's great. So there's no analysts right now that cover your stock, no research analysts. But if I just assume the role of the public analyst on this,
not
conversation,
yet. No analysts yet.
yet.
No analysts yet.
That's right. Sorry, no analysts yet. So if I just assume, let's say, so I take last year $7-8 million of EBITDA, and the reason I use EBITDA is it's kind of an easy number for most companies anywhere, but especially in cannabis, that EBITDA is like a made up number that doesn't transfer to free cash flow. When you go through Grown Rogue's financials, you have the highest, from what I saw as a recent ranking, the highest ranking of EBITDA and operating that actually transfer to free cash flow. So it's actually it's not one of these made up numbers. But if I just assume 7-8 million, and again, I want just a sanity check here, and I just assume that goes up, right? So I'm just going to say goes up to 10 million, but maybe that's too much. Maybe it's 9 or 10, whatever. But you have some growth from, you have pre-rolls, you have good business, and 10-15% growth in Oregon, a little higher in Michigan, et cetera. And then I take that. Now I understand it's a run rate, so you're going to build up to that number. But I'm looking out at calendar Q4 and say hopefully you get to a run rate of around 15 million in EBITDA. So now I'm up to 25, and then I say there's another state coming online, right? And so I'm just going to assume, I don't know. I'm going to throw out a number based on what you've done in other states. I'm going to say annual basis 7. And then, you get some goodness, some retail, some other stuff. I'm getting very close to a $40 million 2025 EBITDA run rate. One, is that crazy? Is that like, are my numbers? I understand you can't control pricing and stuff like that, but I'm not like imagining this, right? Like this is doable.
It's not. I think the logic makes a lot of sense in terms of what we expect to see in Oregon, Michigan, out in Jersey. Some of the stuff we think could come with the Goodness partnership, in terms of, their markets turning on, retail, and then the new market. I mean, it's not, will we hit that? Execution is going to be the biggest driver there. But I think, even if we're at 30 million of EBITDA, which again, we could be at 50. But I think the important part here is Grown Rogue has a growth story, unlike most companies in our space right now who are like kind of retracting. And Grown Rogue spent the last 2 years, really understanding who we wanted to be and how we wanted to participate in this industry. And from that, we're now expanding from a position of strength. And we want to replicate this. And so very few companies, I think, have our growth prospects. And, we're going to continue to execute, and, pricing plays a big role in this. Our team and our bandwidth will be a huge part of it. But, Jersey has pricing pressure, right? To expect it to stay at $3,000 a pound for 10 years is unrealistic.
For sure.
But we also think there's upside there in terms of some of the products we can bring. And so it's your numbers and logic make complete sense.
The reason why it's so remarkable is it's not like, this isn't, in the grand scheme of things, 30 or 40 or 50 million doesn't sound like a lot to a lot of, but when I compare it to your enterprise value of like $60 million, it's absurd. And it's personally why I've argued that you're the most undervalued cannabis stock, but that's my own opinion. I'm not going to put word. But here's my question. So because of the way you're registered and because of the over-the-counter, your stock is illiquid, and there's this is part of why, like, hey, like, this is so good to be true. Why is it $60 million? Is some of the trading platforms like Interactive Brokers, you can't buy Grown Rogue. So let's just say your stock doesn't go anywhere, and we're going into 2025, and it plays out. Now, last year, your stock was up 180%, the best performing stock. Well, let's just say it doesn't go anywhere. You're talking about 30, 40 million in EBITDA, do 60% free cash flow conversion. You're talking about a lot of money as a percentage of your market cap that is free cash flow, potentially $20-25 million of free cash flow. What do you do with that?
We're going to continue to make the best investment decisions that will drive the most value to our shareholders. Right now, we believe that's through expansion. And so all of our free cash is going towards our new markets. Fast forward to 25, we'll make another determination on, is that continued use of free cash to expand the business? Is that stock buybacks? That's the other thing that's been on our radar for the last couple of years. Like, we came close to doing like a normal course issuer bid, even a year and a half ago. Not like crazy numbers, but like when we were down at, 8 to 10 cents, watching all of our business metrics going the wrong way while our stock was super depressed, and saying, is the best use of our cash right now to start buying some of it back? And in hindsight, you could say, even if we spent a couple $100,000 in 2022, like, we'd be up 300% on that money. And so that's a great return of capital to our shareholders. We probably won't do dividends. I don't think that's a good use of return of shareholder value. It's just very tax inefficient, but that's where we'll look at. We'll look at repurchasing the stock in the market, or continuing to use it for expansion, whichever one we think is going to have the best ultimate return. Which is one of the beauties of Grown Rogue, right? Everyone probably says this, but my wife and I are fully invested. I mean, it's our largest holding. We're still the largest shareholders. Our alignment with our other shareholders is probably next to none. And then we have a very tight float. Like, most of our shareholders are long. They have, big holdings. I think, less than 10 people have about 60% of our stock. So conversations with them about what they want to see. And, continue to look for the best opportunities to, build that shareholder value.
I can vouch for not only you, but your wife. Your wife might be more passionate about the business and the positive change that Grown Road can bring.
Yep.
That was
Yeah.
awesome. Just spending time with her and just seeing
Yep.
how passionate she is. And it's going to be really exciting, especially when you turn on New Jersey, you start showing people the kind and the consumers, the quality of product that you could bring. And you start showing people what can be done when a company's focused, head down. Man, this summer and this fall is going to be really exciting when New Jersey turns on. So, well, listen, thank you so much, Obie. This has been awesome as usual. This is going to be an exciting year, and I'm looking forward to what you can deliver. Now, the easy part is just for you to execute.
Yeah. No pressure, as we like to tell ourselves, or as I tell my team all the time, don't F it up. And so, that's where we sit. And so, I'm feeling that strain a little bit, that stress of just the expectations and it's a commitment every single day. And, it's the little things that'll start to kind of create challenges for us. It's not like we have any like big buckets where it's like, oh, that's where a problem occurred. It's that little stuff every day and just keeping the team disciplined and on point. But it's still such an exciting industry, and just the passion for us and our team's alignment towards building the first nationally recognized craft cannabis brand. That's our goal. That's the mission. And from myself all the way down to, everyone, it's just, there's excitements around that, and just the ability at this time in history, as we look back on this industry in 10, 20, 30 years around, who was able to do that, because no one's done it yet. And so it's a big passion for us and what drives us every day. We love flower. We love good quality product. We like seeing people get happy. We love it. So.
Well, I'm
awesome.
glad I'm a part of the journey, and thanks so much, Obie. This has been awesome.
All right. Thanks, Aaron. Appreciate it.